Artificial intelligence is, well, everywhere, and it's demanding more and more. More power, more real estate, and more metal. As an investor, how should you be thinking about opportunities in and around AI? Well, here's a hint for you. It's more than just tech. We'll tell you what that is and more right now on UBS Trending. Hi, everyone, and thank you for joining me. This is UBS Trending, and I am Anthony Pastori. Glad for you to be here, and I'm also glad for my guest who's sitting next to me in the studio today, Paul Baiocchi, Chief ETF Strategist with S&C Alps Advisors. Paul, thanks for coming back.
Yeah, I'm happy to be here. It's good to see you again.
The last time you were here was a few months ago. We were talking about electrification and obviously demands for electricity. And now today we're kind of expanding it even more because the demands for power, the demands for resources are just exploding thanks to the continued evolution and growth of artificial intelligence. I want to talk about the energy side with you because not only is electrification still in demand, but nuclear is coming back into the conversation. What are you talking about when you're looking at investing? You're talking to clients. How are you talking about this particular part of the story with them?
Yeah, and so it's almost as if we're building upon the electrification theme because as we talked about last time, this isn't a 18-month, 24-month trend. This is a mega trend that's going to play out over years and decades. And in many ways, it's a puzzle that we're trying to solve. We're trying to put all the pieces together, and those pieces require a tremendous amount of investment. And that investment goes to things like nuclear. It goes to some of the base metals that are going to be required to expand the grid. It goes to the energy resources. It goes to the solutions that'll unlock certain energy sources like wind and solar, which are high latency, so battery storage or storage technology is a piece of that. And in many ways, it's this very complicated puzzle with thousands of pieces, and it's going to require a lot of creativity. It's going to create a lot of ingenuity. And ultimately, it's going to drive some investment opportunities that might not be well covered in your typical portfolio.
Right. And just to kind of back up for a second, our chief investment office here at UBS also likes nuclear. But of course, the challenges are it takes, from start to finish, 7 to 10 years to build out a full facility. And then there's other things like these small modular reactors, and they're just smaller nuclear, reactors that can be installed. But those are even, if you start building them today, it could be 5 to 7 years before they're ready. So there are some challenges with nuclear. Obviously, electricity is still going to be your main thrust, at least for now. And there's alternative energies as well.
Yes. And so in the nuclear category, the small modular reactor theme has become very interesting to a lot of investors because ultimately, the idea is you can take this very small relative to what we're used to, these large-scale nuclear facilities, and you can plant them on the top of a building or tie them up to a data center and make sure that those data center needs are met. But to your point, the regulatory landscape is very challenging, very complicated, and in theory, it's going to be easing with the current administration and future administration. It does align with a carbon-free future that we're trying to achieve, or at least a carbon-neutral future that we're going to try and achieve. But there's different categories in nuclear. You mentioned small modular reactors.
Yeah.
We've seen down the road that Microsoft's going to be investing money to modernize and turn back on 3 Mile Island, for example. So those are the bringing back life to old facilities, building larger scale nuclear, which will take a long time, and then small modular reactors. And we've seen some companies that have really run in that category.
Yeah, and they're continuing. We were talking earlier. I grew up a few miles from Indian Point in New York, near the Peekskill area, and they're working on reopening that as well. So I wanted to ask our controller if we could bring up that first chart that we had. There's 3 different scenarios. They're energy scenarios. If you could speak to those, because I think they really do paint an interesting picture. What are we looking at here?
So what we're looking at is various projections from various groups that are trying to forecast nuclear investment and nuclear demand. And basically, you've got 3 categories. You've got large-scale reactors. So when we think about nuclear, our experience has been with those large-scale reactors. Then we've got things like micronuclear, which is small modular reactors, which is what we talked about, being attached to a data center specifically earmarked for that purpose, or a small municipality. And then you've also got a category which is taking something like 3 Mile Island and restarting it and modernizing it and extending the life of it. And so those are the 3 categories, and they're very based on the different projections. But the punchline is this is something that is expected not just to happen, but to happen in a meaningful way. And the impact is that it allows us maybe to supplement all of the other energy sources we've been investing a lot of money in, whether it's natural gas, wind, solar,
Right.
or otherwise.
And it could mean significant changes within sort of the energy ecosystems that are there and new ones that need to be built.
Without a doubt.
Yeah, it's a great story, which then takes us to the data centers part of the story. We talk about these a lot because data centers, as we know, they are being built everywhere. So from a real estate perspective, there's an investment opportunity there. But what we also are talking about is the fact that more data centers equals more energy need. So it's kind of a twofold. Again, I said to you, AI is kind of like a cake. All the ingredients go in, and at the end, it's just one big cake. It's not separate ingredients. It's all becoming part of the same story. So give us the data center side of the story.
Without a doubt, and just to build on that cake analogy, you already have exposure to the milk, let's call it that, for the cake. The hyperscalers, right?
Sure.
They dominate the indexes and they dominate most large cap allocations, whereas you don't necessarily have a lot of exposure to the other ingredients, whether it's flour, whether it's eggs. And let's just say that the data centers are the eggs. Real estate is a very small slice of the S&P 500 by weight. But if you look at public REIT markets, data centers have become a much bigger portion of the public REIT market as cloud computing has become a bigger part of our overall economy. And in anticipation of that, we've seen some IPO activity, specifically in the AI data center space. And so REIT investors are going to find that data centers become a bigger and bigger part of their portfolio as that industry continues to evolve. But importantly, when you talk about the investment in the materials, the investment in energy, those are also pockets of the market people don't have a lot of exposure to. Materials is 2%. Energy is less than 3% of the S&P 500.
We really are promoting the idea of a well-diversified portfolio. And the more we go down the road of this, you show how much diversification is possible in one portfolio. It's insane. By the way, just something I found, McKinsey did a study, and their analysis shows that global demand for data center capacity can more than triple in 5 years. That's an incredible number. And they said in that same period, data center demand can grow 20 to 25%. So it's a real story. This is real stuff.
It is, without a doubt. And I think there's a distinction to be made between the data centers most people are familiar with, which are cloud computing data centers, and their electricity needs versus an AI data center. And so you think about every chip that NVIDIA or other companies bring to market, each one requires more electricity than the last. They're more sophisticated than the one that was previously released. And so the demand for electricity just coming from data centers makes your head really hurt because you're talking tetrawatts, gigawatts, megawatts. And I'm not an electrician, but I know that the numbers are massive.
Are high, right? Whatever a tetra, giga, whatever, we know they're big, right? Yeah. Interesting also, Paul, is that in the conversation, again, with AI, and especially demand for components and semiconductors and chips, are metals. And I think gold, especially gold has had quite a run this year, up over 50%. The metal itself has been sort of the talk of the town. But there are the base metals like copper, steel, et cetera, aluminum, that are also playing important roles in AI. So talk about that part of the story too.
Yeah, it's kind of got lost in the story because most people look at a commodities index, which are typically dominated by energy, and they see it up 4 or 5% this year and say, well, commodities aren't actually working. But if you go beyond energy, which has had a very difficult year, you look at the price of crude oil under $60 a barrel, into some of these base metals, and then you extend further out where there aren't futures traded on them, whether it's rare earths metals or some of the other more specific metals that are required for the energy transition, for battery construction, as well as for grid modernization, those metals are going to be critical. And you look at copper right now, it's already in a deficit. It's likely to be in a deeper deficit on a go-forward basis, and it has geopolitical implications. It has strategic national defense implications. And so those segments of the market, the companies mining for those metals, the companies producing those metals, even the companies producing and mining for uranium are becoming a big part of the AI story.
And think about copper, how much wiring is needed to actually just power up these data centers. It's just as simple as just copper as this element, but they have to make into, thousands of miles of wire and cabling. So it's definitely in demand.
Without a doubt.
Crazy.
And even water, which is a big piece
already
of the
a rare
puzzle
commodity on Earth
for cooling the data centers themselves, which Water had been a pretty popular investment theme because naturally the expectation is that population grows around the world if
Yeah.
people have access to clean water. Well, we now need water in a way that we didn't previously to cool these data centers that run so hot.
And so, I don't know what the stat is, but I'm sure it's going to be millions of gallons of water that's going to be required. So that's something that I think people who are building these data centers are going to have to figure out, because there's not enough fresh water on Earth to power as many data centers as we're about to see become built.
And it gets back to this puzzle analogy, because in theory, you want to locate the data center where you've got access to reliable electricity, but also you need to make sure you have access to water.
Yeah.
To support your facilities.
Absolutely.
So it makes the challenge of strategy for these companies so much more difficult and complicated.
So there you go. That's sort of my final question, which for most of the guests that sit here with me, what are the risks here? Because, we're talking about investing, and there are certainly opportunities, but there are always risks involved. So what do you see as some of the bigger risks here?
Well, I think the big risk in my mind is overinvestment. So naturally, I think you're going to overinvest, and that's the concern about these massive capex budgets that we're seeing from some of the hyperscalers, 600 billion, 700 billion. There's a risk that they overinvest in the AI story, but there's also likely a risk that we overinvest in data center capacity, which then leads to maybe a dead end of electricity that isn't repurposed or used or optimized in a world where we're constrained from a resource perspective. I would also say the geopolitical uncertainty globally leads to challenges sourcing the materials we need to unlock the potential of AI.
Right. Paul, again, thank you very much for coming through. I love these conversations with you. I feel like we can go in a million directions, and I'm sure the next time you come back, we'll have a whole other story to tell. So great to see you.
Likewise, look forward to it.
You too. Paul Bayaki, SS&C Alps. Thank you very much, Paul. And thank you to our partners at SS&C. And for more information on anything coming out of our Chief Investment Office, please visit our website at ubs.com/views. Plus, you can make sure to follow UBS on various social media platforms like LinkedIn and Facebook. Plus, Instagram. You can check us out at UBS Trending. Lots of studios content there for you to look at. And as always, if you have any questions about what Paul and I spoke about today, please make sure to continue this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day, and remember to keep your eyes on what's trending. We'll see you soon, everybody.